Hey everybody, welcome back to the channel. Thanks for joining today. So I've been on the lookout for new ETFs to add to my portfolio, and I've been specifically looking for small cap ETFs to add to my dividend portfolio. So in today's video, I want to share a new ETF that I identified and actually made a purchase of today. I want to walk through what the ETF does, what it invests in, what kind of returns they've seen, and what kind of dividend and dividend growth they've been having since inception. So before we start off with that, I wanted to kind of show why I'm focused on small caps. So IWM is a Russell 2000, which generally covers the lower um, capitalization of the market. And you see over the last 5 years, it has an average return of 9.02 compared to the SPY, which is the S&P 500, at 15.25%. So as you see, small caps have been trailing the large caps over the last few years. But if you look back a few years, it was very similar results. And since then, small caps have been left behind as the large tech names of the S&P 500, as well as the Magnificent Seven or whatever you want to call them today, they've continued to increase. But in the past, the small caps have beaten out the large caps and total return over time. So as you see, since there's been such a divergence between the large caps and small caps, I wanted to identify areas of opportunity that I can invest in to look at small caps. And because it's so difficult to do research and understand all the ins and outs of each individual company, I wanted to focus my investment on an ETF that meets my needs as a dividend investor, but also giving exposure to those small cap names. So another reason why I wanted to focus on small caps is the valuations. So this is the forward PE ratios from Yardeni Research. If you've never been to the site, I highly recommend it. But this shows the forward PE of the large caps, mid caps, and small caps. So as of yesterday, the large cap index has a forward PE of 19.5, as shown in the red, whereas the mid caps and small caps in the blue and green both have a 14.9 forward PE. So you're getting better value for your money by focusing on small caps. Again, similar to the total returns that we showed on the previous slide, small caps at one point were valued higher than large caps. You only have to look back, well, 2020 after the pandemic, but before then, there was years and years and years where small caps and mid caps actually had a higher PE than the large caps. It's only been recently since the pandemic, the large caps have taken off and their PE was raised. So with that being said, I feel that there's going to be a reversion to the mean coming forward in the next few years, meaning small caps and mid caps are going to rise in PE, or the large caps are going to go down. But at a certain point, it's going to revert back to historical means. So I want to be able to take advantage of the small cap names while they're still cheap and ride it up, as well as collect a dividend as we go. So with all that said, I've been doing some research to try and identify an ETF that fits my needs, and I was able to find one and actually made a purchase earlier this afternoon that I'll talk about later. But the particular fund that I wanted to talk about today is CSB, the Victory Shares US Small Cap High Dividend Volatility Weighted ETF. Now that's a mouthful, but let's talk about what they do. So this particular ETF offers exposure to dividend yielding small cap US stocks without subjecting investors to the inherent limitations of traditional market cap or yield weighting. If anyone's looked at or invested in the S&P 500 or the NASDAQ, you know that the largest companies take up the biggest percentage of the ETF. There's also some dividend ETFs that are based on yield, meaning the highest yield stocks get the most weighting. In this particular ETF, they don't do that. They do it based on the volatility of the individual holdings themselves. So what they do is they seek to provide investment results that track the performance of the NASDAQ Victory US Small Cap High Dividend 100 Volatility Weighted Index. So they're looking at combining fundamental criteria and volatility weighting, which will help serve as an alternative to traditional cap-weighted index strategies. So the index itself selects the highest 100 dividend-yielding stocks in the small cap 500 index, screened for profitability, meaning they must have positive earnings over the last 12 months, and selects the largest 500 stocks below 3 billion. So then it weights those stocks based on the risk and volatility and picks the top 100. It also reconstitutes twice a year. So as companies do better, they'll be added to the index. And if they don't do so well, they can be removed on a semi-annual basis. All right, so looking at this fact sheet, you can see that the sector weightings is quite diverse. It has exposure to most of the sectors, if not all of them. There are concentrations in consumer discretionary, financials, industrials, and utilities, which gives you the stability that you are looking for and also the higher yields. So switching over to Victory's website, a little bit of more detail. So this fund went into inception in July of 2015. So it's been around for quite a few years. You can see the annualized returns of the particular fund over the last 3 months of 2023. It has been down as well as the 1 year, but over the 3-year, 5-year, and since inception, it is up over 5% on average every year. Scrolling down a little bit more, one thing that I really like to see in this particular type of fund is the beta is lower than the market. So for those who don't know, beta is a representation of the volatility in the market. A beta of 1 is the overall market. And so this particular ETF has a 0.92, which is slightly less volatile than the overall market, which is nice to see. So you don't have to be as worried about your particular account going up and down significantly at any one point. Looking at the calendar year returns through 2022, you can see that 5 out of the 7 years, the fund was up significantly in some years. And in 2023 itself, the fund was up as well. So looking at the top holdings, there's going to be a lot of utilities and related companies. Ali, Northwestern, Vista, Portland Electric, Northwest Natural Holdings, and Clearway Energy are all utility-related companies. Clearway Energy is actually one that I hold individually. They do green energy utilities. I've also held MSC Industrial. They do industrial parts and machinery for corporations and industries. So some names you might recognize, some names you may not recognize. But what I like is because there are 100 different holdings, each particular holding only has a small percentage of the portfolio. The top 10 altogether only represent just under 16% of the fund. So you don't have any particular holding that's a high percentage of the portfolio like you would see in SPY or the NASDAQ 100. All right, another thing that I like about this particular fund is the earnings per share growth for the fund. If you look at all the holdings over the last 3 years, it's up 11.72% annualized. And over the last 5 years, it's 7.79%. So you're getting companies that are growing, not companies that are shrinking in value and earnings. So this is a positive thing for the fund going forward, that you should be able to expect growing earnings, which translate to growing share price over time. Right now, the fund is at a good valuation. A current price to earnings ratio of this particular fund is 13.05, which is lower than the overall small cap index that we talked about at the beginning at 14.5, and also much lower than the large caps, which is at 19.5. So you're getting a pretty good value right now while you collect the dividend and hope that the price earning ratio will rise over time. So now that we know a little bit about what the fund is about and what they invest in, wanted to talk about the expenses. So currently the net expense ratio is 0.35%, which is a little higher than what you would typically see on your large cap ETFs, as well as ETFs like SCHD and DGRO. But because these are small caps and they're more actively managed, meaning that they change over their holdings twice a year, they do charge a little bit higher expense ratio. So if you calculate this out, it's $35 per year in expenses for every $10,000 invested. So at the end of the day, it's not that bad, especially for the diversification you get. But it is more than your other ETFs that are out there. So let's look at how the fund is done over time. And so I pulled this up from the dividendchannel.com, showing CSB since inception has returned 9.24% average annual return since then. That's with dividends included. And as you can see, it's beaten the overall small cap index as represented by IWN by over 2 percentage points a year. So you get exposure to the small cap space, but the dividend also helps, and the lower volatility has provided better average annual returns over the last 8 or 9 years since inception. Looking at Seeking Alpha, the current dividend yield on a trailing 12-month basis is 3.53%, with a 5-year dividend growth rate of 6.85%, which is a solid combination. If you look at the Chowder rule, which talks about adding the current dividend yield plus the dividend growth rate, you're looking for a number higher than 10. So looking at this particular fund, CSB is a little over 10. So this is a solid combination of current yield plus dividend growth. Another thing that I really like about this fund, it is a monthly distribution of the dividend. So I'm going to go back to the website, scroll down to the bottom. As you see, the monthly is a monthly payout. The months of February, May, and August are a little bit low on the payout, but the other months are significant. And this just represents when the dividends are paid from the individual holdings within the fund are typically going to be paid out, it looks like, in the 3, 6, 9, as well as the 1, 4, 7, and 9 quarters. But again, it's a variable payout based on what's in the holding, and that's very typical of an ETF. But it does pay monthly, which is excellent for those who need the income or are looking to compound through the drip, where you're adding more shares every month when the dividend is paid out. All right, so that is a recap of the fund itself, and I wanted to go ahead and mention that I did make a purchase of this particular fund today in my Fidelity. So I made a purchase earlier today of $2,500 into CSB. I plan on adding more to this particular fund over time, but I wanted to go ahead and get a position started to take advantage of it and build it out throughout the year. So hopefully you appreciated this overview of this ETF CSB. It will give you dividend exposure to your small cap names. Thank you for joining us. Please check out the next video that's popping up and look forward to talking to you next time. Thanks.